Five. Count your 10 seconds. You will see when the green thing is on.
How many people usually join these things? I'm curious.
All depends. After the replay, it gets pretty big.
Yeah.
You are live. Go.
Sunil, welcome to Propy Weekly Webinar 109. We appreciate you coming here. I know you're super busy. You're actually over in London as we speak, correct?
That's correct. I couldn't be happier to join you guys here.
Yeah, so we're really excited about the partnership with you and the team over at Abra. For those of you who don't know, Sunil is the head of global partnerships. He does all thing lending in and out of the crypto DeFi world. Super excited to have him on board. Super excited to talk about the relationship with the team and here, the realtors and brokers we have here at Propy. So thanks for coming on board.
My pleasure.
Kind of a really good week. Usually it's Joe and I and some other people, and we're right above like average when it comes to this. So we've got a real true crypto expert to maybe talk us through what has definitely been the most interesting couple weeks in crypto in a long time.
Yeah, it definitely has. And I think that it's if you've been at this as long as I have, which hasn't been that long, to be honest, it's been like 5 years, you start to see the same movie or record being played over and over again, but it's different players and different acronyms, but the same type of story.
Yeah, the UST story, you could have just renamed it because it's happened a few times. So let's start there before we kind of get into what we want to talk about. I think there's a bit of an elephant in the room. Let's talk about maybe a couple minutes on the last week, what your thoughts on the market are, kind of maybe talk about the Terra Luna fiasco, what your thoughts are. I think you're well qualified to have an opinion on that. Do you want to give us a couple minutes on it?
Yeah, I think what's interesting about that story is that it just reaffirms people's pre-existing views on crypto to begin with, right? If you're kind of a naysayer on crypto, you have a lot of evidence to present that narrative. And if you're a proponent of crypto, then you can also cast that as an experiment and things happen in the marketplace and the best products rise to the occasion. So I'm not sure it's necessarily changed a lot of people's minds on the views of crypto who are involved with it. But I do think it's important to put in perspective, like what exactly happened and what exactly were some of the issues that prompted the current situation of Terra Luna. But before we jump into that, we should also acknowledge as macro issues. If you look at all the S&P 500 and the Spider Index and the tech indexes, they're all down significantly, right? Yeah. So it isn't just the backdrop when this happened is also important to put into context. And the entire market, whether you invested in blue chip companies or Terra Luna, you haven't gone to zero, but they've gone down considerably. So I think that's important to keep in mind that's kind of what's also happening in the marketplace. And some of these asset classes that are risky do go up and down. They don't necessarily go to zero like we saw in Terra Luna, but they do go up and down. And so that's the important thing to keep in mind is no one should be investing more than they're willing to lose on these types of assets. Even Netflix, I wouldn't consider that a safe asset. I mean, it could be, but I think that is the main time you got to be willing to know what you're willing to lose in order to know what you can gain.
So we talk about stable coins a lot. I'm a big fan of stable coins as it relates specifically to real estate, because I think it's going to be the wave of the future on how real estate transactions are handled. I think I have a pretty good idea on UST wasn't a true stable coin. It was more of an algorithmic stable coin. It was, and when you say it out loud, it's kind of crazy. It was pegged to a different crypto / token that they owned, which probably was our first red flag. But can you walk us through kind of the difference between UST and maybe like a USDC or the traditional stable coins that are backed by treasury notes as well as cash?
Yeah, absolutely. I think there are three types of major stable coins to take into account. One is tied to a commodities. That could be gold or wheat futures. The other is tied to fiat currencies, as we most commonly know, whether it be the US dollar or the sterling pound or the euro. And the third thing is what we're talking about here, which is more of a novel concept, is an algorithmic stablecoin. And that's just a fancy way of saying, instead of tying it to a real world asset that's well recognized with some history, it's tied to another asset equally kind of novel in nature. And what had happened is that the whole market, the whole system in which that was relied upon required both parties to they had a stable coin, which was the Terra Luna. Then you had the cryptocurrency, the Luna, I guess, right? The Luna one. So they basically needed to prop each other up, tied to each other. Then what happened was, I think there was the founders of the foundation invested as a back insurance policy $3 billion worth of Bitcoin.
Yeah.
So that signals to certain people that there is a certain value tied to this kind of typical coins, and so that's what essentially caused what they call the attack vector in terms of taking advantage of it. So they basically pumped and dumped, and again, there's no evil actors here. These are just simply also other algorithms that are playing into place, taking advantage of market arbitrages. This happens in the regular markets as well, but there's also market forces that either, in these cases, often cases, you notice how some exchanges halt trading, halt certain kind of activity, and they also require certain disclosures. So, and all that kind of stuff that happens in the regular markets don't really happen in this new market, for better or for worse. And so it can easily go down to zero pretty quickly. But at the same time, I don't think there was any kind of nefarious actors in place, or there was any kind of like pure pyramid scheme. But the Terra Luna situation required an example where you can call it a pyramid scheme because it required more and more people to buy the Luna coin to prop up the Terra stable coin, at some point. And then once they felt like it was faltering, it goes down pretty quickly, similar to a bank run, for example, that you see in public markets. But in this case, in the physical world, in the crypto world, it accelerates really quickly. Bank run maybe takes a week. This could happen in minutes. Yeah. So there's no bank to run to in this case. There's a few buttons on your keyboard to kind of press, but you may not get through to it. So it's a risky thing to do. But I think the broader message here is like, these are esoteric instruments and they're taking a lot of risk. It shouldn't characterize the entire crypto community. In fact, the Terra Luna Foundation, they had to sell $33 billion worth of Bitcoin. And when they did that, it did barely anything to the price of Bitcoin. So I think the key thing to keep in mind is that you will have these experiments in crypto that are probably good for the overall market to kind of experiments, and most of them will probably fail. Maybe not as spectacular as this one, but they may fail over gradual periods of time. But if you look at the foundations of what they're trying to accomplish, or even what DeFi is trying to accomplish, it's worth investing in that ecosystem. Generally, it's worth the people are trying to like reshape the existing financial industry.
Yeah, we agree. A lot of people are, it's funny. Everybody knows that we're in a bear market, so don't be surprised when the bear market has bearish activity. It also is a really good lesson to, if you're going to invest, do your research, look at it, look what you think is the best fit for you. Not all stable coins are created equal. Not all decentralized finance is decentralized, as we know at Do Kwon, and that group there was very centralized, and especially in their thinking. Enough about market talk. Let's talk about Abra. Let's talk about what you guys are doing over there. Let's talk about the partnership. We're super excited to finally announce that we've been working together for a while. You guys know Natalia and the team really well. A lot of our Propy ambassadors. Can you give everybody listening and was going to follow and see this on the socials, kind of give us an overview on what you guys are accomplishing over at Abra?
Yeah, the best way to describe Abra, we have our ambitions to be a crypto-based bank. So what that means is not just offering a mobile app and a platform you can trade, sell, buy crypto, but also offering financial services. So we can earn, like a savings account, you can earn yield on your crypto, and like a traditional bank lending business, you can actually borrow against your crypto. Those are the first two products that are out there currently that we can talk about in this webinar. In particular, the borrow product as it relates to the Propy partnership. But that's just the beginning of what Abra is hoping to do. It's not to necessarily replace your bank, but to make it supplement to your bank in many ways, in offering you access to capital at rates and in terms and conditions that are very favorable to the general public. So that's kind of been the overall vision of Abra, which is starting to realize. And it takes a while to build these products in a responsible responsible way. And so if you look at what we're doing, it's there are other companies and products similar to us, but they've been either hit with government kind of notices because they were not following right regulations and compliance. We at Abra we go out of our way to make sure that we are in compliance with all applicable local, state, and federal regulations. But the broader message is this becomes another vehicle in which people can access capital to for whatever purpose, to buy a car, boat, or in this case, a home.
So let me put my realtor hat on. I'm a realtor. I meet with a buyer who has $3 or $4 million in crypto. And it can be challenging from a real estate perspective because as someone holding that amount of crypto, traditional lenders look at that money a lot of different ways. They want it seasoned. They want to look at it in terms of how do you validate how much money is in there. So this for a realtor is a really good tool and a really good partnership from using Abra. So if I'm a realtor and I have a homeowner that has a tremendous amount of capital in crypto, but they're in a bear market like we're in, they don't want to sell it, what can Abra do specifically for them to help them buy a home?
A great question, Adam. But ultimately, what we have right now that's live is the ability for these crypto owners, holders to leverage there's only two parts of it, their Ethereum or their Bitcoin as collateral to access capital. And the terms and rates vary depending upon how much they want to borrow and what the payback period is. To give you guys some idea, we don't allow someone to borrow against the entire value against their crypto because of the volatility. So right now you can only borrow up to 50% of your collateral, of your value of your crypto for the loan, or 30% or 15%. The rates vary based on the amount of what we call loan to value. To give you some idea of the numbers here, like the 50% number, if you have $10,000 of crypto, let's use that as an example, you could borrow $5,000 at around 7 to 8%, and your payback period, you can adjust it to anywhere between 6 months to 3 years. If you want to borrow 30% of that, which is $3,000, you can borrow anywhere from 3 to 4%, again, at the flexible payback period. What's even remarkable, you could borrow 15% of that, so $1,500 off that $10,000 at a 0 APR. It is quite remarkable in terms of what are the rates we can offer our crypto holders to access capital for these purposes. And so it allows them to keep their crypto, realize the potential long-term gains of the crypto. It allows them to not sell their crypto and gain capital gains taxes or whatever taxes, however they categorize it in their books, a taxable event for sure, and to then access capital for a home purchase. So to be clear, this is not a home mortgage product. This is simply a general purpose loan product that can be used mainly for a down payment or in some cases to buy the entire home. We've already had a few inquiries of people who have several $1 million in crypto. They're not looking for a mortgage. They're looking to access capital to buy the entire house. And our collateral is the crypto, not the house. So to be clear, we're not in the home mortgage business, at least not yet, and for the most part. So and also none of these things, if we talk about, require a credit check. They're done within, probably minutes in terms of once you do this. It does require you to bank with Abra. That's part of the deal here. You have to bank with us, and we hold custody to that crypto through our partner, Prime Trust, which is a federally regulated bank with all the requirements and disclosure notices that apply there too. So that's kind of the trends we have there. It's a great way for people, especially some of the younger folks who are crypto rich, who don't have credit history, to access capital. Now, the traditional banks don't recognize this because they don't know what to do with this asset. If anything, look at it as a warning indicator, but it's just a matter of them time before they catch up. It's somewhat kind of I won't say ridiculous, but it's kind of funny how if the same people owned a $2 million Picasso, the banks would gradually loan against that because Sotheby's auction that at a certain price. It's well recognized, well understood. So banks understand that world. It's a world that's been around for a long time, and they'll borrow against that collateral and without any issues or concerns. So, we just because they don't understand crypto, but Abra does, we're able to take those same kind of principles that have already existed and apply it to a new asset class.
It's amazing. It's amazing. It's not a crazy concept to be able to borrow transparently and fluidly with money you have or value you have in your account. but people treat crypto, especially traditional bankers, they look at it like it's something they've never heard of. It's a weird phenomenon, but I think we're evolving quickly. So what else should realtors, homeowners, but just your general crypto holder know about Abra? So it's backed by the FDIC. It's completely transparent. It's completely lockstep in with regulation. So as a realtor, I know if I refer you, I'm staying on the right side of rules and regulations. What else should the average realtor, homeowner, or borrower look at or think about when thinking about Abra?
Well, I should clarify, the funds are not backed by FDIC. That's not the case. It's in terms of the banking rules apply in terms of custodial requirements. So
I made that part up.
But also, I should clarify, if Abra was to go bankrupt, the funds are still there. It's again,
Right.
It's held in custody by Prime Trust. So in Abra, I mean, we've probably all flown on airlines that have been bankrupt. We just don't know they're bankrupt because they still operate, right? So let's not let that concept scare you completely. So we put measures in place to make sure that people who if in fact, for whatever reason, Abra does not operate as a going concern or goes bankrupt, we still have the ability to operate, and our clients still have the ability to access their funds. Otherwise, they wouldn't be giving us millions of dollars, which they have. That wouldn't happen that same way too. Now, the question is, if the entire system broke down, the government's not going to bail us out. But then at the same time, I would submit that I don't think any of us here had to rely on the FDIC insurance to date. So it's one of those things where it's a nice insurance backstop. It's good to have for sure. I'm not saying it's not good to have, but let's be honest here. None of us here that I'm aware of have to rely on the FDIC insurance to be triggered. So that's one thing I would say. The other thing I'd say is that this is not just about Abra giving access to capital for our clients. This is about Abra being a true partner for the real estate industry, in particular real estate agents. And if you think back, my background has been in technology. I've worked at Google and Uber and been in the Valley for 15 years. And most of technology is designed to disintermediate the service industry. This is designed to get rid of intermediaries like yourselves because they consider it inefficient. Instead, Abra has taken a different tact. Our approach is to empower the service industry, in this case, real estate agents, in this new world. So what we're trying to do with Propy is to create a curriculum and program to teach you about the pros and cons, the benefits and the drawbacks of crypto, and of course the benefit, the potential of how Abra products can fit in your context. We view this as a true partnership to educate this whole constituency, this whole community, because one of the biggest anxiety I would imagine all of you have is, how do you stay relevant with this fast-moving world of technology? How do you help your client? How do you address your fiduciary responsibility to your client to best solutions and so forth? So think of us more as a partnership than anything else to help you to navigate this world of crypto and technology. And it may or may not be that Abra is the best product. That's okay with us. We hope we are, but that's not the whole purpose here. We want to be sure that we are here to in lockstep work together, because you guys have industry vertical knowledge that we're never going to get. So instead of trying to replace that, we're trying to empower that.
So let me ask you a question. This is a question that we get often, that I think if you ask 10 people, you get about 8 different answers. To you, what does decentralized finance really mean? A, and 2, what does it represent? What could it be?
Yeah, it's often one thing I also point out to people. You can ask experts in DeFi what they mean. They all come up with different definitions, right? So,
right.
I think so. Don't get caught up in the marketing. The tech industry is notorious for disrupting the English language as it is, actual products. So I keep that in mind when I do that. But I do think there's something noteworthy here, is that if you look at traditional finance, it's all centralized and saying there's one company that has all the data and the one company that's responsible for holding your money and making sure the transactions go through. We just rely on that. We just take that for granted because of the regulations that are supported, and that's all we've known. So what decentralized represents is a step order difference in terms of, instead of having it relegated into one database or one structure or one company, it can be distributed. So all that means is that the cost basis of the cost infrastructure for supporting and providing these services become cheaper. So how is Abra able to offer those types of rates and terms and conditions? I'll tell you why. We don't have to worry about the real estate costs of our bank. We don't have physical locations. We don't have an army of lawyers to support. We don't have the historical legacy IT infrastructure costs they do. So we're building a bank from scratch, from ground up. So we're able to offer all these types of services in a way that's very different, in a way that's taking the efficiencies of a new market and then transferring that to products for our customers. So I think DeFi just represents that part of how infrastructure is changed. And the great example I would share with you, the best way to explain it, it simply represents one way. The best analogy is voice over IP. I think I'm not sure how old your real estate agents are, but it wasn't that long ago. Our telephone calls were based on time and distance, when you called and where you called. And now we can take this conference call for free, along with the data plan, right? So It's pretty remarkable how that happened. And how that happened is they moved the voice and telecom medium from the circuit switch network to the IP network. So what we're doing here is we're moving the financial transaction network from the bank infrastructure or the credit card network to a crypto protocol network. So think of it that way. So in part of that is distributed or decentralized architecture. So it's a subset of that broader story that I just mentioned. So when you do that, you bypass all the old toll booths, all the access charges, all the infrastructure things that no longer apply. And in doing so, you can offer a set of financial products and tools that can be very beneficial, not just for the wealthy, but for everyone.
Right. A realtor said to me not too long ago, DeFi is like crowdfunding where money is lent to people through sources of other people. And I had to remind the realtor, that's no different than how a normal bank works. The normal bank doesn't open up in a city and have millions of dollars of liquid or capital or billions. They just use your money to borrow to Joe down the street and vice versa. So what are some other things that you commonly hear from realtors and traditional borrowers about misconceptions or the value prop of DeFi versus traditional?
Yeah, I don't think DeFi in and of itself is going to be a panacea for solving all the problems. It is just a function and feature of the new model that we're going after. And it also opens up a set of borrowers that perhaps wouldn't be able to have access to capital, right? So that's the big point too. I think that the key thing is, like, if you think of the credit rating, credit history, there are a lot of companies trying to advance that in making AI and credit worthiness access to it. In the case of crypto, we have a little different model. We're starting from scratch. So if we have access or custody of your collateral, we don't need to know your credit rating. We already own your Picasso. We already own that art, so to speak. So we not own it, we possess it. And in case anything happens. So I think that's the big difference here, is that you're extending the ability to access capital to a cohort of people who may not otherwise get traditional loans because they don't qualify under traditional credit rating systems.
I also think crypto and Web3, I'm really interested in the evolution of credit. And you look at Klarna and some companies out there that are bucking the system. You look at some of the new programs like LexisNexis, and the big three are looking at in terms of what is in social and capital credit, the old kind of antiquated way of, there's Adam Brown, he's a 715, there's Sunil, he's an 805. That is going to change in a very fluid way. So I'm really interested to see how that evolves, and it's probably a different conversation for a different time. But I've got a couple.
I can tell I'm far from an 805, but I appreciate that.
You're probably like a 905.
No.
Hey, considering the various, this is a question we have from Ariel, who's very, very sharp on crypto. She's very in touch with the crypto world. I see her everywhere. Considering the various scams and frauds or challenges we have been witnessing, do you feel like there's a need for more regulation or consumer protection tools and contribution of attorneys necessary at some point?
I started my career as a regulator, believe it or not, at the Federal Communications Commission. Different industry, but I'm very familiar with the regulatory world.
What year were you there at the FCC?
I was there from 90. I'm going to age myself now. From 98 to 2001, during the broadband revolution, so to speak. But first of all, Ariel, great question. I think that it's less about, it's more about clarity on existing regulations and how they're applied than getting a whole set of new rules, right? The government's really worried about, people avoiding taxes, people funding bad actors, and, and also fraud, right? So I think those are the real three areas that we're trying to address. There are plenty of rules in the books for that right now. So the idea is like clarity on how those existing rules apply to this new thing is needed. It's not so much new regulations per se as to how do these existing rules that we all could agree on. We don't want to fund terrorists. We don't want people to dodge taxes, and none of us want to be defrauded. So we need to. There are plenty of rules in the books for this, but in how they're applied in this context has been inconsistent and unclear. And the other issue that we're dealing with here is that there is an internal fight in the government as who owns jurisdiction over this stuff. So you're in the middle of that. We're in the middle of that. Whether it's the SEC, the Commodities Exchange Commission, the FTC, there's all sorts of different regulatory bodies.
We're hoping you knew.
Well, it was easier for me at the FCC. There's only one group, was the Federal Communications Commission. But in this case, in finance, I've noticed there's like, I don't know, I can't even tell you, probably 5 or 6, and they all want a piece of this action.
And the CFPB, don't forget the CFPB too.
I'm sure
real estate,
they want a piece too. And they all want a piece of it. And unfortunately, there's not been like an omnibus approach or holistic approach, I should say, to addressing this issue. And so you're seeing the consequences of that. So I would say, Ariel, great question, but less about any new regulation, but clarity on the existing ones and who has the authority to go after it and to enforce it.
Yeah, we often say daily, I think there's always going to be a place in real estate for title and escrow for oversight. And when we have this push to automate the real estate transaction, have less custodial data, less custodians involved, we still think there's always going to be a place for oversight and the ability to execute on that. And so I think it's a good point. Less regulations, just be strict about enforcing them and have a little more clarity. So if people wanted to find out, John asked if they wanted to find out more about Abra, maybe have a conversation with you, how would they reach out to your team, look at your product suite, and engage with you guys?
Yeah, you can always reach out to me. I'm a team of, a broader team, but right now for the purpose of this partnership, is mine is Sunil at Abra.com. There's SUNIL at Abra.com. And we are putting together with the marketing teams a bunch of material, collateral information to make it very digestible, a few one-pagers. So right now we have this product. It's a general purpose loan product, a personal loan product that applies to whatever, right? So what we need to do is customize that information in the context of a home buying experience. So we take into account the customer journey, and we take into account the real estate's role in this journey, and put that pieces together. So there's a little work to be done, but the hard work's done. The actual product is out there, it is live, and it can happen. But in terms of making the job easier for all of you to socialize this to your clients, it's still a little bit of work in progress. But if you have any questions, please reach out to me. And the loan product it's live now, so we can actually get capital to your clients if they want to bank with Abra. So that does happen now. But in terms of like marketing this stuff broadly, putting this in your own kind of literature and marketing campaigns, we still need to do a little bit of work on getting that documents done.
Yeah, I'm going to look into the platform. I may take out an Abra loan just to be able to tell my realtors how easy it is. And then maybe I'll buy some more Ethereum or Bitcoin because it's on sale right now, right?
We're happy to give you a personal line of credit there, Adam. So let us know.
Hey, how long does it take to underwrite or approve a loan? Let's say it's a reasonable amount. Is it minutes or days or weeks?
Under 10 minutes.
So you take your wallet to wallet.
They need to transfer they have to open an Abra account. They need to transfer their crypto to Abra. So they need to do that. Once they have the money, so that may take longer, right? So it's not just that. Assuming they have the Abra app and they have their crypto in Abra, the actual process to go about getting a loan takes probably minutes, because we have the collateral there and we see it. I mean, it's no different. We're just banking it. We're just simply putting it to use.
Well, even if you do have your money in a Wells Fargo bank and they see all your bank accounts, it still does take a long time. So you guys are doing it a hell of a lot better than traditional.
That is true, but there's also a broader thing here with these banks. I mean, even if you have $10,000 at a Wells Fargo, they won't give you a loan for $5,000.
No.
You know what they'll do? They'll send you to the credit card group to get you the credit card account balance. So if you think about it, for consumer credit, we live in a world of unsecured credit because the banks are motivated by that. They get outrageous fees and rates they can charge for it. So what we're trying to do here at Abra more broadly as a crypto bank is go to a world of collateralized credit. And why don't they do that? Why can't you have a credit card that takes into account your savings account? There's no reason they can't, but they don't.
Right.
So there's reasons why they don't. Is that, again, they're not evil actors, and some might point to disparage them, but it's all about incentives. And the incentives of the current existing infrastructure, the current financial system, is one of unsecured credit, and is not very friendly for most consumers out there.
But by mitigating that risk, it allows you to offer more affordable rates.
Yeah,
Whereas
there's no reason why they can't do that. I mean, typically speaking, but
no one gets excited about 3 or 4% APRs. They like those mid 20s, right? And that's where they make their real money.
That's exactly right. They don't. That's what they get measured on the street by, and that's what they're going to go geared towards too. So it is unfortunate that that's the disruption. That's the opportunity, right? So it may be unfortunate, but it's an opportunity for us. So we'll take that any day.
So John asked this one final question, then we'll let you out of here because I know you've traveled over to London. You took a red eye. You're in the hotel. It's quite late there. It's quite late there. So thank you for having us. So if I have, let's say I took the $10,000 into an Abra account, take a $5,000 Abra loan. Do you guys pay me in a stable coin, crypto, fiat? How do you guys pay that loan out, John?
You get paid in a stable coin, US, it could peg to the dollar. But not like not an algorithmic stable coin, actual fiat-backed stable coin, and then you can take that and transfer to your bank account tied to Abra. So that's
right. Yeah.
So and that may take a few days again, depending on how the system. If you do ACH versus wire, so when you actually have the funds in your account, it may not be minutes, but the loan approval process is. But when you actually have the funds in your actual bank account, it depends on the mechanism in which you do it. It depends on the bank which you tied to Abra. So there are some aspects there too. But again, we only take collateral as Bitcoin and Ethereum. So I want to clarify that. We don't take Doge, we don't take other these things because and the system is built into, and we should talk also about the notion that if in fact the crypto goes below a certain value, there've been several occasions where the price of Bitcoin and Ethereum went below 50%. So in those situations, we give the borrower a chance to true it up and adding more money. Or if they can't, we'll sell the amount of collateral just enough to keep the loan current.
Right.
Again, we're not trying to screw the borrower here. We're not trying to foreclose on the loan. We're simply trying to true up the amount to do it. That's why it's very different than traditional banking loan products. We view ourselves very much so in the same as a fiduciary with our clients to really help them through these kind of moments that happens. And to date, even though it's a new product, I'm proud to say that we haven't had any defaults, but it'll happen. I mean, it's natural in any kind of situation it'll happen in the future. But just know that we're very friendly towards the borrowers here and want to make sure because we want them to keep coming back. We're invested in their success.
Yeah, no, I mean, and having a 50% LTV is reasonable. It's fair.
That's enough cushion right there to begin with, but then even then, things
you would think, right?
Yeah.
We all hope. I can promise you, everyone on here would hope and keep our fingers crossed that it's more than enough. So, Sunil, thanks for coming on board. We're super excited about the partnership. We've known about it for a few weeks. We've been chomping at the bit to be able to tell the world how proud we are to partner with you guys. So. I know you're super busy all over the world. Thanks for having time for us.
Adam, thank you again for inviting me. It's my pleasure to join you in the Propy community, and I'd be gladly come back if you guys want me or someone else.
I'm going to get you a Propy sweatshirt. Will you team Propy?
I'm glad we're at too. I'm happy to do it. All right, everyone. Have a wonderful afternoon or evening, wherever you may be.
See you, Sunil. Thank you.
All right.